Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is May 22nd, 2012, doing another market wrap-up and also going over the trades that I made during the day today, what my thinking was, why I made the trades, and so forth. So, just to jump right in here, let's go ahead and look at the S&P futures, the E-mini contract. Obviously for most of, from December on forward through April, you had a very, very nice consistent uptrend. It was only the last 2 months where things started getting really shaky in the markets. Of note is the failure to make a higher high in the market. Instead, we made a lower high, and that was really what started it all. And I would even go as far as to say that this is like a double top in the market. Once we broke below that support here, you can see we tested it multiple times. We tried to hold on to it, just couldn't do it. And then once we did that, and you can see we sort of formed a bear flag right underneath it after we broke through it, things started getting pretty ugly. So today that leaves us with a pretty nasty sell-off for the most part. And if I just zoom right in on this, we can see exactly what we're looking at in the market. So the sell-off that we're seeing, it's confined within a channel, but it's a pretty steep sell-off. Over time, this is pretty hard to hold on to, because even if it's the beginning of a bear market and everything, this kind of a sell-off is very difficult to hold for like more than a month or so, because the kind of damage that'll take place if this lasts longer than 1 or 2 months is unbelievable. So you'll be seeing like an S&P after a couple months down in like the 1110 or 1100 or 1000. So this is eventually going to get broken. So we saw the first attempt to dead cat bounce this market yesterday, and it did a fairly good job closing at the highs. Very typical of the market. Volume was low. It wasn't even anywhere close to the volume that we saw on these days here. And then today, you look like what was going to be continuation. I had mentioned earlier on one of my posts that I put in the chat room that this resistance line would probably kick in at some point. I didn't realize it was going to kick in, as perfectly as it did today, but it did. I mean, you can see here we actually broke above it intraday, and it just, as soon as we got too far or too quickly ahead of ourselves, the sellers just poured in, pushed the market back down lower, took the quick day or two's worth of gains that they were able to get off of the market and move on. And you can see here in futures, we're heading lower too and back into it. And like I said, we're lower in futures right now, and we're already sort of playing outside of this band area a little bit. So the sell-off is extremely steep, and but that really doesn't bother me much if we do break out of it. It's literally it's going to happen. It's inevitable. So if we, let's say tomorrow we do move higher, for instance, we recover off of the minor sell-off so far we're seeing in futures in the night hour here, and we close above this trend line, I'm really more concerned about, do we consolidate, and then after consolidating, do we maybe form like a, so let's say we consolidate sideways here for a little bit after breaking out. Then the question becomes, do we break out of that consolidation and start moving higher again? That's really what I'm looking for. Now, my general thought is that we probably aren't going to be consolidating. I think this here is probably the start of a new wave lower, so that is really what I'm looking to see in the days ahead. How much of a sell-off do we get here? Today's action was very telling. I think that was not a good sign for the markets for us to sell off like we did there at the afternoon part of the trading session. So that's that with the S&P. Russell looks pretty rough. NASDAQ, no better. The Russell is actually the worst. It's trading below, or it was trading below the 200-day moving average before yesterday's rally. So that'll be interesting to watch to see if we get back below that again tomorrow. A couple of quick trades. I was in EUO, and I was actually feeling somewhat optimistic about the trade going into the close yesterday, thinking the euro might bounce a little bit more, but I really didn't get that. I mean, in fact, I was up going into the close yesterday. I had gotten originally in at like 20 59 yesterday, and I was shorting this sucker. So this is the EUO ultra short. So I was expecting the euro to actually go higher because that's what this thing trades against. It's an ultra short against the euro, and so I was expecting the euro to go higher, and this obviously to go lower by 2x of that. But you can see, I mean, I looked good on yesterday, but then today it just took right off, and I got out at 2085 or 2084 for a 1.2% loss. No big deal. You know, you can move on. I was only looking to make 3-4% off of this trade, so the risk reward parameters remained intact. I actually got a little bit early, or out of it a little bit early. Let's go ahead and look at ATVI. You'll see here I actually got in here back on Friday of last week. I was watching it, and you can see here there's a ascending channel that it had been trading in from like last November, and it's like a elongated bearish flag pattern here. You go all the way up to the highs of 14, and then it just comes crashing down, and then it just, for a very long time here, it forms a bear flag pattern that is just very consistent outside of this little blip here below the channel pattern. It holds true to this support level here. I mean, it tests it multiple times, and each time it bounces. And the same can be set up top here as well. So what I'm looking for is a break of this support level here, and once it does, I get short. And on the reverse side, I was also watching it for a breakout above 13. I probably would have gone long on it, but it never even got close to doing that outside of this day right here. So it breaks down. I don't stay in this but for 2 days. I get in because at this point the market's pretty sold off, and I'm getting a little bit weary of holding any long positions. So on Friday, I get in. Monday, I get out down here almost at the day's lows. I get out at like 1290. I got in at like 1206. So I got out for like a 1.3% gain. And then the market, of course, goes on its huge tear yesterday, and this goes right back up with it. And you can see it's just sitting right at that resistant level. So I got back in again today when the market popped about 10 points in the morning, and I got in at 12.12, and it subsequently went below 12, and then settled the day at $12. So I'm up about 1% here. I'm pretty excited about this trade, particularly if the downside continues to unveil itself in the broader markets. The other trade, and I made 3 short trades today. I was only planning on doing 2, but I bended a little bit here on what my conviction was. WCRX, lovely setup here. I got in on this one last week as well, back on the 15th when it broke below this support level. So once it broke below that, I got short. I covered on Friday, and then this was a really good trade. I made about 4% or so off of it. And then the last 2 days, it's basically been creating like a bear flag pattern as well in it, and I went short. So I got in at around $20.15, and I have a target of $18.97. So just to show you what it looks like on here, basically want to get down to here when it starts filling that gap, and then I'll just close out my position there. And then I have a stop loss at $20.85. So if it starts creeping back up into this resistance level here, I don't want nothing to do with it. So I got about 4% to the downside of risk, and about 5.5% to the upside. So in terms of profit, so that's a pretty decent trade. Maybe not the 2-to-1 that is considered optimal, or at bare minimum for risk reward, but still, I'll take it, especially with the setup looking so good. JCI. This stock, I mean, this thing just has breakdown written all over it, and I got into it later in the week last week, and I just wasn't able to really hold it for as long as I like because the markets were getting extremely oversold very fast. I got in at $30.29, so right about there, and then my stop loss is placed at $31.07, so about a 3.3% stop loss, and then my target's going to be about $28.45. So there we go, right there. You can see I'm going to be using this little support level here. You can see where it's bounced off of the support level here some, and then again here. So if we can get, that'll give me about 5-6% on the trade, risking about 3 1/3. So you got that 2-to-1 risk-reward ratio in your favor. You can see here it's definitely broken down from that level, breaking down and rallying back into this minor resistance level. You can see it again here and as well as through here. So I'm looking for this thing to move back down tomorrow. I'm only slightly down on it right now, not even 1/3%. So we'll see what it brings. That's going to do it for tonight. If you guys have any questions, feel free to hit me up in the chat room tomorrow. I'll be there all day, and all the best to you. So long.